Hi, this is Vijay Bambwani, and I'm back with you today to talk about a very contentious issue for short term day traders and swing traders. The topic is, does Fibonacci analysis work? And if it does work, why it works? In the 16th century, a town in Italy had a unique problem. The residents loved rabbit meats, so they cultivated rabbits for food. The problem with cultivating rabbits is that rabbits procreate or multiply at an extremely fast pace. In those days, do remember that there were no pakka roads. So, the idea of concretized or tar covered roads did not exist. People laid out wooden planks on kacha streets, and horse drawn carriages moved on those wooden planks. There were many instances where rabbits actually died under the hooves and wheels of those horses and horse carriages, and they were infested by rats and other pests, and therefore diseases started cropping up. The city's fathers wanted to find a solution and wanted to know when the population of rabbits would outnumber the population of humans and go beyond control. They roped in an expert mathematician, Leonardo da Fibonacci, to find a solution and estimate when the rabbits' populations would go out of hand. He therefore came out with numbers which are now known as Fibonacci numbers. These are nothing but successive numbers where the succeeding number is added to its preceding number. For example, 1 and then 2. The third number would be an addition of 1 and 2, which would be 3. The fourth number would be an addition of 2 and 3, which would be 5. This wasn't all. Leonardo da Fibonacci found that there was a mathematical correlation between the smaller number and the succeeding bigger number. The smaller number was 61.8% of the bigger number, and the bigger number was 1.618 times the smaller number. This basically started people wondering. They started seeing Fibonacci analysis everywhere in nature around them. So if you actually see the curls of a sheep or a battering ram in its horns, you will notice Fibonacci analysis there. If you were to stretch your arms fully and measure them from fingertip to fingertip, you will realize that your arm span would be 61.8% of your entire physical height. If you were to see the length of your legs right up to the pelvic bone, it would be 61.8% of your entire height. Fibonacci is seen in the constellation of the stars. Definitely, therefore, Leonardo da Fibonacci thought there would be a presence of Fibonacci even in the financial markets. Now, this is where the school of thought between traders is split. There are some who would go with Fibonacci analysis as a truism and formulate trading programs around them, myself included. And there are others who disapprove and disbelieve in Fibonacci analysis as hearsay, but even those non-believers or disbelievers do grudgingly admit that Fibonacci analysis is more of a self-fulfilling prophecy, which means it is working because so many people are trading by the Fibonacci analysis that they are exerting their influence on the prices. Why reinvent the wheel when you know the wheel is round? So whether you want to be a believer in Fibonacci or a disbeliever who grudgingly admits that Fibonacci is a self-fulfilling prophecy, I take solace from an old Arab Bedouin saying. Bedouins are those nomads who keep roaming around in the desert pitching their tents. The saying is, praise be to that which strengthens. Anything that makes you stronger can't be bad. And in financial markets, profits are what makes us stronger. So Fibonacci analysis basically says that if the price of a security, a commodity, currency, bond, or an equity goes from point A to point B, the entire move should be construed as 100%, and whenever it retraces or corrects, it will correct to the extent of 61.8%. Now, this Fibonacci number, 61.8%, is also known as the golden mean or the golden ratio. The problem starts when people start to look at this golden mean and expect the corrections to last that much. This often leads to disappointment. Let me tell you why. The reason is earlier execution costs, the gyration or volatility of securities was gigantic. So the movements were so large that 61.8% was hit very often. In this day and age of digital market, discount brokers, and online trading, the movement of securities has really compressed, which means that you need to reinvent the Fibonacci numbers. And modern mathematicians and traders have adapted these Fibonacci numbers from the golden mean to smaller numbers. So we take 61.8% of 61.8% and come to 38.6. We take 61.8% of 38.6 and we come to 23.7. So on the Fibonacci ruler, if you want to day trade, you must start with 23.7, go to 38.6, and then 50% because halfway is half done, and then 61.8%. Once you start modifying your Fibonacci ruler to this extent, you will start to see magic unfold. So if you were to use the new age Fibonacci, you will see that it gives you superlative results. I, for one, belong to that school of thought which believes that Fibonacci trading analysis and trading systems based on Fibonacci definitely works. Whether you want to believe it or not believe it, it's your call. Traders who trade on Fibonacci systems have an edge over the non-believers. This is Vijay Bambwani signing off for now, but not before reminding you to join me on Tuesday, 21st of January for my free online summit, the Instant Income Summit, on 21st of January, Tuesday at 5 p.m. It's absolutely free. There are no joining charges. And before I sign off, let me remind you to click like on this video. Do not forget to subscribe to my YouTube channel, and please feel free to share this video with your family and friends. This is Vijay Bambwani signing off for now. Do take very good care of your investments and trades. Also, don't forget to sign up for our free email newsletter, The Fast Profits Daily, and get access to our free guide on how to trade the markets like a pro.